Welcome to Unbox Your Curiosity. I'm your host, Christiane Zhao. Today, we're diving into a surprising shift that's reshaping the business world. Why some of the most disruptive, high-performing companies are now built by teams of just 2, 5, or maybe 12 people. From AI tools that give one-person startups the reach of a Fortune 500, to ecosystems that let small players plug into global infrastructure, we'll unpack how the small team, big business model is rewriting the rules, and what that means for the corporate giants trying to keep up. As usual, I have invited our AI guest, Stephen, to join us. Stephen is a Google Gemini-powered model that was trained with multiple key sources I gathered. Let's begin. Have you ever stopped to think why some of the really groundbreaking innovations these days seem to be coming from tiny companies like teams with fewer than, say, 15 people?
Yeah, it does seem a bit backwards, doesn't it? You'd think the giants, the ones with all the cash and resources, would be leading the charge.
Exactly. But we're definitely seeing something else happening, a real shift. I mean, picture this, a startup with just 2 people, but they can offer customer service that feels like it's coming from a huge Fortune 500 company.
Or, a single person using AI to do marketing that maybe 5 years ago would needed a team of 50 or more.
That's the kind of scale we're talking about. It's wild.
It really is. And this isn't just some fleeting trend. It feels more like a fundamental change in how businesses actually work and grow now. AI, artificial intelligence, is a massive part of it. It's kind of leveling the playing field.
Leveling the playing field, I like that. Yeah. Allowing these small teams to operate with a kind of precision and professionalism that used to be well reserved for the big guys.
Precisely. Scale and professionalism without the massive overhead.
Okay, so that's what we want to dive into too. Our mission, if you will, is to unpack how and why these small teams are scaling up in ways we've never seen before.
Right. So in part one, we'll look at what's driving this, the forces behind it, and what makes these small teams so effective.
And then in part two, we'll switch gears and talk about the flip side. What do the big corporations need to do? How do they adapt or even just survive in this new world?
That's a fascinating picture of where business might be heading.
Definitely should be interesting. Okay, let's jump into part one then. That first big question, what is driving this shift? It feels like it happened almost overnight.
It does feel sudden, yeah. But a huge piece of the puzzle is the tech itself, specifically AI native tech stacks.
Well, AI native meaning built with AI in mind from the start, right?
Exactly. Software, platforms, designed from the ground up to use AI effectively. And these tools, they're just dramatically cutting down the need for big teams. They automate or handle tasks that used to soak up so much time and so many people.
Like what kind of tasks?
Well, think about customer service. AI chatbots can handle queries 24/7. You've got generative AI writing content, creating marketing copy, even helping with code now, like Copilot.
Right? So one person, or maybe just a couple of people, can suddenly manage workflows that used to need whole departments.
That's the core idea. Marketing, customer support, even some development aspects, it's a massive force multiplier.
Okay, so AI is clearly a huge driver, a real game changer, but is it just AI or are there other, maybe more structural things going on? You mentioned ecosystems earlier.
Yeah, it's definitely not only AI, though AI is maybe the accelerator right now, but structurally, yes. Businesses are operating differently. They aren't building everything from scratch anymore. That whole empire-building mindset is fading.
So instead of building empires, they're plugging into ecosystems.
Pretty much. They leverage existing platforms. Think about e-commerce. Shopify makes it easy to set up shop. Social media like TikTok gives instant reach. Cloud services like AWS, Google Cloud, Azure provide the backbone infrastructure.
So it's more like assembling something from powerful building blocks that already exist.
Exactly. It's very plug and play. You need payments, Stripe, communications, Twilio, back-end stuff, Firebase. 10, 15 years ago, launching something complex required massive investment just to build the basics. Now, small teams can access these powerful modular services and launch globally.
That makes sense. And what about finding the people? Even small teams need talent. How has that changed?
Yeah, the talent piece is crucial. The global gig economy, combined with the boom in remote work, has totally changed how you find people.
So you can tap into talent anywhere.
Anywhere. Platforms like Upwork, TopTal, Fiverr, you get access to specialized skills on demand. Top designers, engineers, marketers, ops people, they could be anywhere in the world. And often, you can hire them for specific projects at a fraction of the cost of a full-time local employee. It gives startups incredible flexibility.
And the whole philosophy of how you build a company seems different too. This lean startup idea, how does that fit in?
It fits perfectly. The lean startup model, popularized by Eric Ries, is all about minimum viable products, MVPs, and iterating really fast based on what customers actually say and do.
So you don't build this massive thing upfront based on assumptions.
Right. You build small, test, learn, adapt. This inherently cuts down the need for huge initial teams and massive upfront investment because you're constantly checking if you're on the right track. Less waste, less overhead.
Okay, so we have the tech, the ecosystems, the talent, the methodology. What about the customers? Are people actually wanting something different from smaller companies now?
I think so, yeah. There seems to be a growing trend, maybe a reaction to the mass-produced stuff from bigger companies. People are often looking for something more artisanal or maybe human-crafted with a real story behind it.
More authentic, perhaps.
Exactly, authenticity. And small, passionate teams, especially when they're powered by this efficient tech, are often really well-positioned to deliver that. They can be niche, they can be personal, they can connect directly.
Okay, so that covers what's driving it now. How do these small teams actually make it work so well? Is there like an ideal size for this kind of nimble operation?
It seems like there might be. The research points towards micro companies, often in the range of, say, 3 to 12 people. And there's maybe a sweet spot right around 12 people.
12. Why 12?
Well, around that size, you tend to get a really good balance. You have enough people for some specialization, everyone kind of knows their role, but you're still small enough to be incredibly agile. You avoid the layers of bureaucracy that slow things down.
Right? You can just move, decide quickly, change direction if needed.
Absolutely. That's the inherent advantage. Small teams move faster, their decision-making is quicker, development cycles are shorter. They can pivot almost instantly if the market shifts or a new opportunity pops up.
And testing ideas must be cheaper too.
Much cheaper.
Yeah.
The lean model means you can run experiments without betting the farm. And because they're usually digital native, launching globally isn't some huge hurdle. It's often built in from day one.
You mentioned agility and speed. Let's talk about communication within these small teams. How does that work compared to a big company?
Oh, it's like night and day. It's almost their superpower. In a team of, say, 12, information just flows, it's organic, it's instant. There are no endless email chains, no bureaucratic ladders, no silos between departments.
Just direct conversation.
Exactly. Remember that famous Jeff Bezos quote about 2 pizza teams? When your whole team fits around 2 pizza boxes, magic happens.
Huh? Yeah, I remember that. Keeps meetings efficient, I bet.
Probably. But seriously, this idea of innovation at the speed of conversation is real. An idea can spark, get instant feedback, be iterated on, and start rolling out before a big company might even schedule the first exploratory meeting. It makes the whole team function like a single, fast-moving organism.
Okay, that really paints a picture, which brings us to this idea of the small team, big business wave. Are we really seeing tiny teams build like million-dollar companies?
We absolutely are. It's not just theory. Solopreneurs, micro teams, they're building brands with revenues in the millions, sometimes tens or even hundreds of millions, and often with really healthy profit margins.
How? How are they managing functions that used to need whole departments?
Through subscription tools, mostly. Those modular services we talked about earlier, they give small teams superpowers: marketing automation, sophisticated accounting, HR platforms, supply chain management, cybersecurity. Things that used to require dedicated staff are now accessible via affordable software.
Can you give an example like the Shopify and TikTok combo?
Yeah, that's a great one. A small team can set up a professional e-commerce store on Shopify, manage inventory, and then use TikTok's massive reach and targeted advertising to build a brand and drive sales very efficiently. Or think about AI generating product descriptions, ad copy, social media posts. It automates so much.
And the AI chatbots providing 24/7 support that we mentioned earlier in a previous episode that really does give a tiny company the presence of a much larger one.
It absolutely does. It creates that illusion of scale and constant availability. AI-powered marketing is another huge one. Hyper-personalization used to require massive data sets and big teams. Now, AI tools allow even a handful of people to run incredibly sophisticated, targeted campaigns. It's genuinely shrinking the required headcount for these functions.
And this effectiveness, this leanness, it makes them attractive acquisition targets too, right? These perfect bite-sized nuggets.
Very much so. Tech giants are often looking to acquire innovation and agility, and these small, proven teams are ideal. Look at the history. Instagram had only 13 employees when Facebook bought them for $1 billion.
Wow, 13.
Yeah. And Tumblr, around 10 employees when Yahoo acquired them for over $1 billion. Even a company like 37 Signals, the creators of Basecamp and Ruby on Rails, famously operated with just 12 people for many years while serving millions.
These aren't just flukes then. It's a viable model.
It's proof of concept. The economic data actually backs this up more broadly, too. It's not just about tech startups.
Oh, really? How so?
Well, if you look at U.S. state-level data, states with a higher concentration of smaller businesses, meaning fewer employees per average workplace, think California, for example, they tend to have higher average weekly pay.
So you mean you get higher pay in smaller workplaces?
Generally, yes. Something like $1,369 per week compared to maybe $1,173 in states with larger average workplaces. They also see slightly larger average pay raises, about 3.7% annualized versus 3.1%, and faster job growth overall, like 17% since 2013 versus 12%.
So small business, big raise isn't just a saying in the U.S. context.
The data suggests there's truth to it. Smaller, nimbler companies seem to be driving significant economic benefits in certain areas.
Okay, this is a huge shift, so let's pivot now to part 2. If small is becoming the new big, what on earth does this mean for the traditional large corporations? They must be facing some serious headwinds.
They absolutely are. The biggest challenge, agility. It's just not optional anymore. Large corporations are almost, by definition, slower. They're less adaptable. And that makes them really vulnerable to disruption from these smaller, faster competitors who can react to market changes or customer needs almost in real time.
It's a direct threat. And what about their internal structures? All that history, the legacy systems, the hierarchies. That must be a disadvantage now.
A huge disadvantage. You've got these legacy cost structures, often bloated hierarchies, complex old IT systems. They just don't align well with today's lean digital-first economy. And think about implementing new tech, like enterprise-level AI. Integrating that into complex existing systems is incredibly costly and time-consuming. It's not just plug and play for them.
Right, it's a massive overhaul project, and the way they innovate, that has to change too, doesn't it? Keeping it locked away in an R&D lab probably doesn't cut it anymore.
That model feels increasingly obsolete, yeah? Innovation can't just live in a central lab or headquarters. It needs to be decentralized, spread throughout the organization, and connected to the outside world, to that ecosystem we talked about.
It is very interesting because in the traditional context, we see how big companies are able to negotiate better deals or have greater scalability. But in this context that we are just talking about, their big size becomes a weakness.
In many ways, yes. Scale can equate to slowness. You have immense data complexity. Making decisions across multiple global departments takes forever. Productivity bottlenecks pop up everywhere. Optimizing a huge, diverse workforce is a nightmare. And adapting quickly to market shifts, forget it, is like trying to turn a battleship on a dime.
Okay, so the challenges are clear. What's the path forward? How do these large corporations adapt? What do they need to do?
It requires some fundamental shifts in strategy. First off, they really need to rethink the classic build versus buy calculation.
Meaning stop trying to build everything themselves.
Exactly. They need to get much better at partnering with nimble startups or integrating ready-made APIs and external services. And their M&A strategy needs to evolve, focus less on just buying scale or market share and more on acquiring specific capabilities, talent, and innovation. Buy the speedboat. Don't just keep polishing the battleship.
That makes a lot of sense. Acquire the agility. But what about changing things inside the battleship? How do they make their own teams faster?
That's the internal challenge. They need to rebalance their teams. Moving towards smaller, modular, cross-functional squads, mimicking that startup structure internally can inject some much-needed speed and responsiveness.
Like internal startups?
Sort of, yeah. And it's not just about rearranging org charts.
Yeah.
McKinsey research, for example, shows that fundamentally redesigning workflows, especially integrating generative AI deep into processes, has the biggest potential impact on boosting earnings, on EBIT. It's about deep operational change, not just tinkering.
So it goes beyond just adopting new tech. It's changing how work gets done.
Precisely. And maybe even creating internal marketplaces or incubators. Structures that deliberately foster entrepreneurship and allow rapid experimentation within the larger company. Give internal teams the freedom and tools to act like startups.
And what about the overall mindset, from top leadership down?
There needs to be a shift from wanting to own and control everything to becoming an orchestrator. focus on enabling innovation across a wider ecosystem, including partners and startups, rather than trying to command and control every single aspect.
Yes, orchestration, not just ownership. I like that. And this requires real C-suite involvement, doesn't it? Especially with something like adopting AI technologies.
Absolutely critical. True value from AI comes from organizational transformation, not just plugging in new software. That requires top-down vision, commitment, and governance oversight. It can't just be delegated to the IT department. Leadership has to drive it.
So it's also about reframing what it means to be big.
Yes. Rebrand bigness. Move away from the image of a slow, impenetrable fortress towards being a platform, an ecosystem orchestrator, an enabler of innovation, both inside and out. And part of that new identity involves proactively managing the risks that come with new tech, especially AI things like accuracy issues, cybersecurity threats, IP infringement, privacy concerns. Larger organizations actually tend to be ahead on managing these risks, which can be a strength.
Okay, so big companies need a major rethink. How is the investment community viewing all this? Are they starting to favor these smaller, nimbler players?
There are definitely signs of that. After the Magnificent Seven tech stocks drove something like 90% of market returns recently, there's a growing feeling among investors that 2025 might be the year for smaller companies.
Why is that?
Well, historically, markets that become highly concentrated like that tend to correct. Investors start looking for value elsewhere, often rotating into smaller cap stocks that might be trading at a discount. Plus, adding small and mid-cap stocks can help reduce overall portfolio volatility.
And are the broader economic conditions looking favorable for them too?
Potentially, yes. If the Federal Reserve starts cutting interest rates, as many expect, UBS CIO, for instance, is predicting significant cuts through 2025 that creates a friendlier financial environment. Lower borrowing costs help everyone, but especially smaller companies that might rely more on floating rate debt.
So it's not just the small businesses themselves thriving, but a whole support system is popping up around them.
Exactly. This whole scaling without growing trend is creating demand for new kinds of businesses designed to help these smaller players.
Like what?
Things like specialized marketplaces for buying and selling small businesses, new valuation services tailored for SMBs, natural language dashboards that make complex data easy for anyone to understand and use.
And lots of AI tools, I imagine.
Tons of AI productivity tools, yeah. Tools that let micro companies manage really complex functions, finance, marketing ops, HR, with very few people. Even advanced capabilities like data cataloging and governance, which used to be purely enterprise-level stuff, are becoming more accessible. Companies like Data.World, for example, help manage data effectively, ensure quality, and even use AI context engines to make other AI tools like LLMs work much better, like 3x more accurate.
Wow, so even the tools to manage the tools are becoming accessible.
Right. It's an entire ecosystem evolving to empower the small and lean.
And what does this mean for the overall shape of the market? Is it fragmenting?
Some analysts predict what they call a barbell outcome.
Barbell.
Yeah, picture a barbell. On one end, you get massive growth in the number of small, niche, agile businesses. On the other end, you have a small number of huge, trillion-dollar AI platform companies providing the underlying infrastructure, the AWSs, the Googles, the Microsofts.
And what's in the middle?
That's the question. The prediction is that traditional mid-sized companies might get squeezed. They lack the hyper-agility of the small guys and the sheer scale and foundational power of the tech giants. So maybe we see growth through fragmentation at the bottom, powered by consolidation at the very top.
Fascinating. A barbell economy. Okay, this has been a really insightful deep dive. To wrap things up, what are the main takeaways for listeners?
I think the biggest one is that the future isn't just about getting bigger anymore. It's about getting smarter, faster, leaner. Optimizing for intelligence and efficiency. And AI is absolutely central to that.
So the goalposts for growth have shifted.
Completely. And for many businesses, being small isn't just a temporary phase on the way to getting big. It can actually be the end game. A successful, sustainable model that offers high wages, good job growth, maybe even better work-life balance, especially for owner-operators.
Right? Like that 3-7 signals, quote, you mentioned you can do big things with small teams.
Exactly. Yeah. It's hard to do small things with big teams, and small is often plenty. For the big corporations listening, the message is pretty stark. Adapt or risk becoming irrelevant. Survival depends on embracing distributed innovation, managing change proactively, investing heavily in AI talent and skills, and undertaking real operational transformation, not just superficial tech adoption.
It really makes you rethink the definition of success, doesn't it? So the final thought for everyone listening as the scaling without growing era really takes hold. Maybe ask yourself, what does your definition of growth, whether personal or for your organization, need to become for you to really thrive in this landscape?
Good question to ponder.
Definitely something to chew on. Thanks so much for the insights today.
My pleasure. It's a fascinating time.
This makes the end of today's episode. If today's episode got you thinking differently about growth, make sure to follow Unbox Your Curiosity on Apple Podcasts, Spotify, or YouTube, and follow with me on LinkedIn for more insights to stay ahead. Until then, stay curious.